How's it going, everybody? Welcome back. So this week's been quite a roller coaster. I had been actually expecting a little correction. We haven't hit correction territory yet, but in the past week, as you see, my portfolio down 19%. The Dow, though, had its worst two-day point slide in history, shedding around $1.7 trillion in value. The Dow down 929 points today, more than 1,000 point drop, which is the third worst point drop ever. And I'm still crazy about these valuations and how high the stock market is up, because I believe it can still go down another 1,000 to 2,000 points, and I would still say that it should drop even more than that. On February 12th, the Dow closed at record highs of about 29,551, which means that it is actually approaching correction territory, which would be around 26,596, which would be the drop of at least 10%. And same thing with the S&P 500 and Nasdaq, both having sharp drops these past few days. The S&P 500 down about 7.6%, since from its recent highs, it's or loss of a value of 1.7 trillion just this week. So what's going on? What's going on with the markets? So of course everyone knows what's going on in China and basically slowly spreading across different countries, which is the coronavirus, fear of the coronavirus, the disease, which originated in Wuhan, China. I'm sorry if I said that wrong. Late last year, it's starting to affect global trade and travel, which will show in the earnings, and it's slowing down economic growth. This disease has not yet been declared a pandemic, but it has sickened many people in China, South Korea, Japan, Malaysia, Italy, Austria, Spain, Croatia, and Switzerland. Manufacturing in China has been slowed down because of what's going on. And China, China being the powerhouse that it is also a big buyer of products and services from other countries and companies such as Apple. Lots of people don't really necessarily rely on China, but China is huge in the world economy. Lots of people get what they need from China, and we don't know how long this outbreak is going to last. Obviously, no one knows exactly how long. Everyone's working fast. These pharmaceutical companies are working fast to try to find some kind of cure or something that would prevent the spread of this to continue. But I predicted before, I think I've talked about this before, that this is going to affect earnings. I don't believe this is the end, even though this two-day drop has been pretty crazy. I predicted that we've needed a correction for like a few months already, because especially in the beginning of this year, from the beginning of this year till about, say, last week, stock market's been up insane amounts. Let me just see if I can show you guys my portfolio real quick. Just in the past 3 months, right? Even with what's been going on, my portfolio is up 116% in the past 3 months. Right here, let's just say December 31st, my portfolio went from 17, let's just say from 17,000 all the way to 29. But the highest point, if you look in the past month, I was all the way up to 36,000, even I think close to 37 or even 38,000. I was all the way up there with my portfolio. And even I was starting to worry. I'm like, should I start selling some things? Because this is going up way too fast, but I do not want to sell off anything just yet. I do not want to sell anything. I will continue to be buying. Once bad news comes out, it starts to snowball. Usually when stocks go up, it's like a stairway. It's going up slowly. But once the stocks start going down, usually they take the elevator down, if you know what I'm saying. Like, it just goes straight down fast. And that's what we're seeing. Just a straight dip down. And another reason why the markets are starting to drop, and I believe they will continue to drop, is because of the election. Uncertainty about the US presidential election outcome may also start to drop the markets more. And many people believe that if Bernie Sanders, who is characterizes himself as a democratic socialist, wins the Democratic presidential nomination and even possibly the presidency, stocks will take a hit because he is anti-business. That's another reason why we might not see the end of this little dip that we have going on. Another one is because insane valuations. Like I've been saying, there hasn't really been any good deals. I've been waiting for a dip for quite a while, and I'll show you after I'm done saying what I think is going on and what will continue to keep dropping the markets. I'll show you what I've been up to buying in my portfolio, because I actually been purchasing quite a bit, and I will continue to keep purchasing quite a bit, and I will continue to add, and I will continue to put up content to show you guys what's going on in the markets and what I see are good values in the market. Because right now, before this last week, valuations were high. Even after the dip, I mean, these valuations are still high. If you look at each individual company, Activision, Facebook, Nvidia, all the ones that I own, if you just look at them, they would be considered still high in valuation. If you look at Tesla, it's 797. That's nothing. I don't be surprised if it hits 600 flat. It still, to me, would be a little high if it hits 500. I mean, I would buy, of course, but you know what I'm saying. Nvidia, just before anything, I think it was like a 300 plus dollar. Facebook was 220. Activision 65. And of course, you know, the cannabis market does its own thing. Uber was like at 45. All these things down. Planet Fitness is looking interesting to me. Of course, Planet Fitness is looking interesting to me. And another thing that I've been looking at that's also been worrying me is the bond market. The government bond yields have been dropping steadily as investors start to turn to them. And of course, when that happens, it drives the bond prices up, even with the global economic growth and the coronavirus coming up. Also, the 10-year Treasury note yield, it's at the record low of right around 1.32%. And the 30-year Treasury note rate has reached its all-time low last week. All these are little signs that you'd pick up on when you start seeing that the markets are getting a little bit crazy, if you know what I'm saying. So I would not be surprised if I see the Dow going down even more. I wouldn't be surprised if it hits 25 or even 24 or $23,000. I wouldn't be surprised. I wouldn't be surprised if it goes down another 2 to 4,000 points in this year. And if it does, you know what? That would be the time to start buying a ton of stocks. It would be the time, because we haven't really seen anything in the past few months to buy. Honestly, I think the last time that I've seen any uh, purchasing opportunities would be probably, let's see, the past 2 years. In the past 2 years would probably be in around the end of 2018. That would probably be the last time. And that was, I think that was because of the trade war, the beginning of the trade war. That's when it started affecting that. That was the last time I saw the opportunity to purchase stocks. And right now, if it hits 25,000 around there, the Dow, lots of companies will start looking very, very good to buy. And I'm only saying this for me. I would be purchasing lots of stocks around that point. If it ever hits that point, I'm not sure. We don't know. Don't know. I believe that this would, maybe it would bounce back tomorrow, but I believe by earnings we would see lots of companies be affected by what's going on with the coronavirus. It would affect earnings, even if it's affected them by a little, like a couple percentages. It still affects them, and I would show, and I would believe that this would continue on until earnings being completely volatile until then. What we've been seeing in the past 5 years is usually ups, straight up, and then when there's a little correction, it just goes down for a week and it comes back up in the next week. That's what I've been seeing. But we haven't seen a correction where it goes down 10%, down 10, 15, even close to 20%, and it just stays there for months. We have not seen that yet. And once that happens, I know lots of people, lots of investors are going to be worried. And that's why it is important to only invest in the money that you're willing that you're not needing right now, that you don't need at all. That's why it is important to do that, because if we ever get to that point and it's a months and months and you do not want to sell for a loss, it is important that you put the money in the stock market that only you don't need right now at this moment. All the money that I put in the stock market right now, I don't need it. I won't need it next year. I won't need it in the next 5 years. If I really needed it, then I would sell it out, of course. But I don't think I would need this money until I retire. But let's actually go on to my account and let's see the history of my account. All right, guys. So let's look at my history. Let's look at some of the purchases that I've made. And I've actually done a lot of purchases. I'll start from the beginning of February. I bought as soon as the Tesla dropped, I bought some. Every time I buy shares of companies when they drop, I never usually buy anything when it goes up. I always love to see stocks in the red. That's why that's when I start buying. I bought a lot of Tesla, Uber, Roku has been going down a lot. Aurora Cannabis, of course. Uber, Facebook, Uber, Roku, Uber, Aurora Cannabis, Canopy, Roku, Canopy, Uber, Square, Roku, and Nvidia, Facebook. This is all this week. Facebook, Nvidia, and Uber, Aurora Cannabis, Canopy, Uber. Lots and lots of purchases, and I will continue to buy more as the market continues to correct itself, because I still believe it's overvalued by quite a bit. Like I said, I wouldn't be surprised if the Dow hits 25,000 by summer. I'm just saying, I wouldn't be surprised, and I'm actually quite ready for that to happen. I've been sitting on money for a long time, and I'm willing to be able to purchase stuff at a discount. Yesterday I was like, okay, finally we got a drop, and I believe that it was going to drop more again today, and I was right. I'm not sure about tomorrow. Usually there's not 3 days in a row where the stock market goes down more than 500 points and almost back-to-back 1,000 points. If it goes down another 1,000 points tomorrow, honestly, that would surprise me a lot. That really would. But that's all I needed to say today. I will keep you guys updated on the portfolio and the markets if I see anything interesting going on. So I'll see you guys in the next one.